It's tax season. Time to pay Uncle Sam, unless you're rich. Welcome to America Uncovered. I'm Chris Chappell. Taxes, they're everyone's favorite topic of discussion. That's why certified public accountants always get the most action. Swipe right, ladies. So Monday was the deadline to file federal and state income taxes. And if you didn't, well, don't worry, there's always next year. That's how it works, right? But taxes can get very confusing very quickly. And it doesn't help that the U.S. tax code is more than 3,000 pages long. It's so long because tax laws have been revised over and over again, especially to close some loopholes in the system. The good news is, there are still plenty of loopholes. And for the people with the money to make the right investments and hire the right accountants, they can end up paying a smaller percentage in taxes than the average middle-class American who works for a living. And it's all perfectly legal. So, how do they do it? Here are the top 7 ways that rich people legally avoid paying taxes. Number 7, low salaries. The average person earns a salary from their job, but the more money someone has, the more they can earn passively, like through investing in stocks. And those are taxed at the capital gains rate, which is a lower tax rate than money earned through working. Rich people earn more money, but the super rich earn less. For example, a corporate executive won't take a salary of $10 million a year. Instead, he takes a low salary and gets the rest in company stocks. When the value of the stocks go up, he pays only the lower capital gains tax. Take Jeff Bezos, the richest man in the world. His annual salary? Just $80,000. And while you may think, with a salary like that, the poor guy can't even afford a modest private jet. But don't worry, he also owns shares in Amazon worth $100 billion. And those are taxed at a lower rate. The third richest man in the world is Warren Buffett. He says the mega-rich get extraordinary tax breaks while most Americans are struggling to make ends meet. And to make himself an example, Buffett acknowledges that he pays a smaller percentage in taxes than his own employees. In a 2011 op-ed in the New York Times, Buffett said he paid only 17% of his income in taxes in 2010. Meanwhile, his employees paid higher amounts, between 33 and 41%. Number 6, corporate tax. Amazon is one of the world's largest companies, but it did not pay any federal income tax in 2017 or 2018. Which sounds crazy because in its 22 years of operation, Amazon has earned a total of $58 billion. And Amazon is not alone. Of the Fortune 500 companies that have already filed their 2018 taxes, 60 were profitable and yet avoided all federal income tax. Amazon avoids taxes mainly by claiming that they reinvest all their profits each year, and therefore technically have zero profit. Some argue that this is actually the tax code working as it was intended, since it means Amazon is pumping money back into the economy with each investment. But Chris, you say, isn't this how rich corporations avoid taxes, not rich people? Well, remember, kids, corporations are people too. Kidding aside, if you're a top executive, you can personally benefit from your wealthy corporation. Want a luxury BMW? You can get the company to pay for it. If the company buys it, it's a business expense, and neither you nor the company pays tax on that amount because it's not income. Want to take a week-long vacation to Thailand? Hold one business meeting there, and you can write off most of the trip as a business expense and pay no taxes on that either. The more luxurious your lifestyle, the more you save. Number 5, charitable donations. Rich people have long used donations as a way to get a hefty deduction on their taxes. Basically, they donate money to nonprofit organizations and then write it off as a deduction from their total income. You don't have to pay taxes on money you give to charity, at least up to a certain amount, which is about half your income. This is a great way of avoiding taxes while doing good at the same time. That's assuming your preferred charity is something like disaster relief or the arts or a local soup kitchen. Maybe not if your preferred charity is 1-800-Cadillacs for kids. But let's say you're, I don't know, Michael Bloomberg. You can actually start your very own charitable foundation like Bloomberg Philanthropies. Then you get a tax write-off for every dollar you donate, and you can direct your charity to do whatever you want. That's perfectly legal. Or you can give to something called donor-advised funds, or what Bloomberg, the media company, not the man, calls black box charities. That's where you set up a nonprofit company that holds your money and accumulates interest, and then you can direct that money to whatever charities you want at some point in the future, proving that there are always more ways not to pay taxes. Number 4, carried interest. It turns out if you're a hedge fund manager or a venture capitalist, you earn a salary, but instead of calling it a salary, you can call it carried interest. The idea is that your fund's profits are realized over the long term, so they get treated as long-term capital gains. That's why instead of paying a top tax rate of 37%, they pay only about 24%. Why does this make sense? Hire me to run your hedge fund, and I'll explain it to you. Number 3, home mortgages. Getting a mortgage can be a great way to afford your first home. And thanks to a federal law enacted way back in 1913, you don't have to pay taxes on most of your mortgage interest. In theory, this tax deduction benefits everyone, but obviously it only applies to people who have enough money to make a down payment on a home in the first place. And this tax deduction favors the wealthy even more, since they can typically afford to own several homes or big expensive homes with swimming pools and a yard for their exotic peacock collection. Number 2, property taxes. Similar to the mortgage interest deduction, there's something called the real estate tax deduction. This allows people to deduct property taxes on their first and second homes. Again, this favors the wealthy for the same reasons as the mortgage deduction. In the end, although the results can depend on different factors, these two methods can result in thousands of dollars in deductions every year. And finally, number 1, death and taxes. Don't be sad when your parents die, as long as they were rich, because then you get to inherit all their money. That is, if they didn't cut you out of their will because you turned down a position at the family business and moved to New York to run a YouTube show out of your friend's living room. Hypothetically. But anyway, inheriting a lot of money sounds like fun, but it can also be a huge pain. For the children of rich people, inheriting the estate could mean they owe taxes on their newly found capital gains. And if they're inheriting more than $11 million, they'll also get hit by an estate tax. Unless their parents created an irrevocable trust. The downside is that once it's set up, it can't be changed. The upside is the assets in the trust are often no longer part of the taxable estate, so fewer taxes may be due upon death. And if it's set up right, the heirs of an estate could inherit it all completely tax-free. For the super rich, death may be certain, but taxes are not. So what do you think? And have you filed your taxes yet? If not, you should probably go do that. Otherwise, leave a comment below. And now, I'll answer a question from one of you who supports America Uncovered through Patreon. Guy asks, I know you guys live in and broadcast from New York. It's my understanding that it is incredibly expensive to live there. As someone who lives in a much less expensive area, is there a reason that living in New York is worth the cost? Good question, Guy. I originally moved to New York to get my master's degree at NYU. And then I got a job, and one thing led to another, and I ended up creating China Uncensored. For that show, I work with a small Chinese-American TV network based in Manhattan. I use their studio, and I do a half-hour version with Chinese subtitles for their TV broadcast. Then, in late 2017, I created America Uncovered. In theory, I could do that from anywhere. But it makes sense to stay in New York for both shows. It's easier to get interesting guests to come to our studio when it's in Manhattan than if it were in some out-of-the-way place like Battle Mountain, Nevada. Not that Battle Mountain isn't a great town. So I live in New York because it's the best place to work. Plus, from New York City, I have easy access to Washington, D.C., as well as 2 great international airports and 1 lousy international airport. Thanks for your question, Guy. And now I can legitimately say, I know a guy. And thank you for supporting America Uncovered through Patreon. Once again, I'm your host, Chris Chappell. Thanks for watching America Uncovered.